Well, hello, this is Jeremy North with your educational and economic update for November of 2022. In this month's video, I will discuss major headlines that influence markets in October and also the first week of November, along with the economic and market events that we are looking at to influence the remainder of November and future returns. Please stay tuned at the end of the video for the required disclosure statement. Well, stocks had an excellent comeback from their big losses in September as the markets seemed to price in the idea that the Fed may ratchet down their inflation-fighting interest rate hikes. Despite the fact that inflation continued on a blistering pace during October. The S&P 500 was up 8.1% for the month of October, even though earnings growth came in the lowest since the fourth quarter of 2020. This gain brings the S&P 500 year-to-date loss to negative 17.7%. The Dow Jones had its best monthly gain since 1976, as it was up 14.1% in October. This brings the Dow to negative 8.4% for year-to-date. The NASDAQ was up 3.9% and is still considerably down for 2022 at negative 29.3%. Bonds continue to lose value as rates rose, with the aggregate bond index down another 1.9% for a total of about negative 17% so far in 2022. The 30-year bond was down big again at negative 6.1% for the month and negative 33.4% year-to-date. However, on one positive note for savers, money market yields have increased substantially this year, with some yields approaching around 3% after starting the year below 0.25%. Economic indicators are showing that the corporate spending and industrial production are healthy. Jobs have been added and the unemployment rate is historically low. These are great indicators for the strength of the economy. However, these are some of the same strengths that are fueling inflation, which is the reason the Fed continues to raise short-term lending rates. According to the Fed meeting minutes from November 2nd last week, the committee anticipates that ongoing increases in the target range will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. But the Fed also said that they will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation. This statement gave investors some hope for lower interest rate hikes in December and beyond. Well, the midterm elections have been dominating the news for the past few weeks. Expectations were for the Republicans to take back control of Congress and possibly the Senate as well. This would have created a split government, and as I have mentioned in the past, this scenario is historically the best for stock markets as it causes a bottleneck in Washington and not much gets accomplished. Not that it really does anyway. But as of Election Day on November 8th, the Republican windfall did not really happen. Markets reacted negatively on the 9th after the election news and reversed course on November 10th with huge gains going into the lunch hour, probably due to the better than expected inflation data. Investors like the lower inflation figures and are hoping that this leads to an easing of the trend for the Fed to raise short-term lending rates over the next few months, as they hinted may be a possibility as they monitor all conditions going forward. Moving on from the U.S., the war in Ukraine continues to wreak havoc on the world economy, driving supply chain issues, increased heating costs, and wheat production issues. Europe has had to bear the brunt of much of this negative impact, but it is still affecting the rest of the world. With the uncertainties of the still to be finalized election hanging over the markets, as well as the uncertainties of the future Federal Reserve's rate increases, we expect the markets to remain volatile and unpredictable. Remember, we are here to help. As always, we are diligently assessing the economic and political implications for your portfolio. Should you have any concerns or questions or would like to discuss your personal situation, please give us a call. With all that being said, here's the disclosure I am required to read. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or as a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including the potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. Thanks again. This is Jeremy North signing out for the month of November 2022. I hope you have a wonderful start to your winter months. Keep warm. I know it's chilly out where I'm at,